Good evening, ladies and gentlemen, and welcome to our class on Bollinger Bands, sponsored by LegacyFx and Investing.com. Now, tonight's class is brought to you by Legacy, one of the world's leading regulated providers of Forex and CFD trading. They are a regulated provider, and if you go to www.LegacyFx.com, you can sign up for a demo account as we're speaking. If you can't access their site, means they're not regulated in your home country, and they only provide services where they are regulated and licensed. Now, when you trade with Legacy, you have a choice of trading on their web trader, their mobile trader, their MetaTrader 4, or their Cerex station. You choose the platform that works best for you. You can trade easily on their web trader by simply picking the asset, how much you want to invest, the direction, and then you can set up your trades. They offer a great amount of education, and they firmly believe in helping their traders to be the best they can be. So let them educate you for a more successful trading experience. They offer easy deposits and withdrawals. The Legacy Pro Programs Reward Station, they have outstanding security, and they have a phenomenal trading academy. So since Legacy is a regulated provider, I'm required to give you a risk warning. So I'm going to read the first paragraph, and if you could read the rest with me, I would appreciate it greatly. Spread bets and CFDs are complex instruments and come with high risk of losing money rapidly due to leverage. 76% of retail investors' accounts lose money when spread betting or trading CFDs with LegacyFx. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Legacy provides an execution-only service, and therefore any market analysis, opinion, commentary, or other information which is provided during this webinar is for educational purposes only. Now, in tonight's class, we're going to be looking at some live charts. But please, these charts are my standard teaching charts. They're the standard assets. These assets have not been selected as recommendations or assets that you should be watching. These are just the charts that I teach from every class. So please do not construe this as a market opinion or an analysis. I'm simply teaching you how to use Bollinger Bands. Now, tonight's class is being recorded, and if you wish to see a recorded version of this class, in about 24 hours, you can use the same link you used to attend tonight's class. Otherwise, after they've had time to edit and clean it all up, you can also find it on Investing.com, where you signed up for the class, under the Education tab, and just look for Webinars on Demand. Now, also tonight, I'm going to be sharing with you two short presentations. Those presentations can be accessed later at this YouTube channel where the link is I just popped up on your class, and just look under in the playlist, look for Bollinger Bands. Also, I've put together a handout for you tonight. This up on your screen, the What's and How's of Bollinger Bands. You can click on that download button on your little screen to download it to whatever device you're listening to class tonight, because this is only available during our live class. You will not be able to record this download this during the recorded classes, and it's only available tonight. So please click on the download button and download it now, and then you can transfer it later to whatever device you'd like to keep it on. So let's get started talking about Bollinger Bands. Now tonight, I'm going to use the term security quite often when referring to tradable financial instruments. This includes stocks, bonds, commodities, futures, indices, mutual funds, options, cryptocurrency, CFDs, and Forex. Now, sometimes I may imply and I may say a share or a stock. I may say Bitcoin. I might say the euro US dollar. Okay, but I'm referring to all tradable financial instruments in which there's an open market. Okay. Similarly, and I'm being very specific about this because I've gotten over the years many nasty emails. Okay, I intermix the term investing and trading. Now, most of us are here because we're Forex or CFD traders, which is short-term, and we're traders. We may be day traders, we may be swing traders, we may be scalpers, we may be whatever we might be, but we're overall not looking for investments. We know the difference. Typically, an investor takes a long-term position, while a trader takes a much shorter-term position. But you know, it gets very monotonous saying trading over and over. So I intermix it with investing and trading. But the fact is, Bollinger Bands will work adequately well for both investors and traders because they adjust depending on the time frame in which you're looking at them. Now, another question that I get asked quite often is, will this tell me when to buy? Now, Bollinger Bands can be used for transactional signals. They might give you buy and sell alerts, but everybody wants to know what the price will be tomorrow or next week or next year. Wouldn't investing be easy if we knew the answer to these seemingly simple questions? But alas, I don't have a crystal ball. I don't have a Ouija board. And yes, there's many gurus out there that can tell you that they can do anything for you, but the fact is nobody can predict where price is going to be. So if you're attending tonight's class in the hopes that technical analysis, specifically Bollinger Bands, has the answers to all of those questions, I'm afraid I got to disappoint you earlier. It doesn't. However, if you're attending this webinar with the hopes that Bollinger Bands will improve your investing and trading, I have good news for you. It sure will. But ultimately, you need to remember that risk management and money management are the most important tools you can employ, and price action is the only thing that dictates the market because nobody can control where price is going. Now, Bollinger Bands was created by a very well-known money manager named John Bollinger. That's not a difficult one. But we have a very lucky situation when it comes to Bollinger Bands because John Bollinger is still very active in the markets. So you can go directly to the horse's mouth and not have to read what all these gurus and market experts and strategies guys are trying to preach to you and tell you. So you can go when you want to www.bollingerbands.com and read exactly what John Bollinger has to say. You can watch his videos. You can understand exactly what this means, not with other people's interpretation. Because there is an abundance of information published on how to trade with Bollinger Bands. Much of it, though, is discretionary in theory. The how to use Bollinger Bands information usually pushes it back to the trader to interpret what the security price is doing relevant to the bands. Now, Bollinger Bands falls in a category of envelopes and is one of the few, the company we use for our webinar presentation, Citrix, it's just done an update, and they have some little glitches in this update. And when you click on their little button to put on the marker so I can put marks on it again, it changes the screens. So we got it back, because once you go back and do it again, then it's fine. Bollinger Bands consists of an upper band and a lower band. And it's one of the few indicators that actually gets dropped directly on the price chart. It's based on a moving average and then something called standard deviation. And that gives us the upper and the lower bands. Now, we're going to talk about how this is achieved tonight, but after this, you'll never have to worry about the mathematics in developing Bollinger Bands because all the charting systems offer Bollinger Bands. You just click on the little thing that says Bollinger Band Indicator, and it drops it right on your chart for you. But Bollinger Bands can be applied in all financial markets, including equities, Forex, commodities, futures, as well as cryptocurrency. Bollinger Bands can be used in most time frames, from very short term to hourly, daily, weekly, and monthly time periods. And Bollinger Bands answers a simple question. Are prices high or low on a relative basis? If price is high, it means that the price is near the upper band. If price is low on a relative basis, it's usually by the lower band. So by definition, price is high at the upper band and low at the lower band. That bit of information is incredibly valuable, and it is even more powerful if combined with other tools such as other indicators for confirmation. So Bollinger Bands are a technical analysis tool. Specifically, they are a type of a trading envelope. Bands are usually thought of as employing a measure of central tendency as a base, such as a moving average. And that's what Bollinger Bands does. It starts with a moving average and then forms an envelope around that price structure. So the Bollinger Band consists of the middle band, which is the moving average, and an upper and a lower band. These upper and lower bands are set above and below the moving average by a certain number of standard deviation of price. And that's a term that we're going to have to explain, because you have to have some concept of what the standard deviation is. You'll never, like I said, you'll never have to calculate it. But by understanding what it is, it can help you use the band more successfully, or realize when something is out of mix with the band and the price and the indicators, and maybe it's giving you a false signal. The general principle is that by comparing a security's position relative to the bands, a trader may be able to determine if an asset's price is relatively low or high. Further, the width of the bands can be used as an indicator of the volatility. In other words, the narrower the bands, the less volatile the markets are. So let's go over and look at a live chart. Let me pop one up here for you. Okay, so we're looking at gold on a 1 hour chart. This is a live chart. It is not, like I said, a recommendation. I use this gold and the euro US dollar for my demonstration assets. That's it. Now, the first part of Bollinger Band starts out with a moving average. Okay. And it starts out with a 20 period moving average. And I've dropped that moving average on this chart with this gold line. Now, if you're not exactly sure what a moving average is, you should come to our classes on moving average. But this is based on a 20 period simple moving average. And a moving average basically clears out the noise in price. We then, with Bollinger Bands, drop on an upper and lower band using a standard deviation of 2. Now, you could change those standard deviations. Uh-oh. Okay. To something else, but then it's no longer Bollinger Bands. It's Barry's Bands, Bill's Bands, Brian's Bands. So we can turn on I'm going to turn on, because I turned them off for the simplicity of showing you. So once we drop our bands on, we have an upper band and a lower band. Okay. They're both exactly the same distance from the moving average band. Now, the shape of the band itself doesn't tell you anything. The shape of the band, okay, is just arbitrary. Now, the wider the band, from here to here, helps you determine the volatility of the market. Not whether it's moving down or up. That doesn't tell you anything about volatility. When the bands are narrow, the market is showing less volatility. When the bands are wide, the market has high volatility. Prices are thought to be high when they approach the upper band, and price is low when it's near the lower band. And the difference between this moving average and this upper band is 2 standard deviation. The distance between that band and the lower band is minus 2 standard deviations. So as you can see, it's not difficult to put on a chart. It's automatically put on the chart with these defaults. You can color code them any way you want. You could do whatever you want with them to personalize them. I made them blue and gold only for class, so it's easier for you to see on your screen. So let's get rid of these markings. And let's go back to my PowerPoint and let's talk about what standard deviation is. Okay. Now, I don't remember. Yes, I did. I told you about the presentations. So Bollinger Bands are typically charted over a 20-period look-back period. That's the moving average. Now, some traders mark those periods, days. Other traders prefer to use short-term looks, and they may use periods or 1 hour. So it's whatever chart you're using for your type trading. In addition, the default of the upper and lower band is set at 2 standard deviations above and below the price. However, it doesn't have to be 20 periods. It should be noted that many traders will decrease the standard deviation when charting less than 20 periods. So you can modify it, but once you've modified it, you have to then test it and come up with your own rules about how exactly it's going to work. So my belief is you always use what the founder of or the person who developed the indicator used, not what some guru or market strategist is telling you. Because when you use, whether you're using RSI or stochastics or MACD, they've been developed and they've been back tested and tested and tested and tested over years. So I always stick with the 2 and 20. Sometimes I might use a 2.5. By using a 2.5 standard deviation, it reduces the number of signals I get. But when I get a pure signal, it's a little bit safer. But it's only because I've been doing this for 40 years that I have the advantage of knowing how it works. And when you know how an indicator works, then when you customize it, you're using some part of your own knowledge and experience. So in the real world, no statistician would ever calculate standard deviation by hand. So you don't need to know how to calculate. You'll never be asked how to calculate it because the calculations are quite complex. Now, standard deviation is not developed for the financial world. It's a statistician's use of how to analyze data. So it's used all over the place. Standard deviation is a measure of the dispersion of a set of data from its mean. So in our case, the word mean could be moving average. So it's how the price data diverges from the moving average. It's calculated as the square root of variance by determining the variation between each data point relative to the mean. If the data points are further from the mean, this is a higher deviation within the data set. In its simplest form, this means the mean is simply the average of all the data points in a given set. In investing, for example, you might want to know the mean closing price for the last 20 days. This can be obtained by adding the closing price for each session dividing by 20. That's your moving average. Okay. Because markets are fickle at best, traders and analysts use moving averages that adjust daily or hourly to incorporate the most updated data. Now, by default, the Bollinger Bands are set at 2 standard deviations. Then from there, it's said that within the Bollinger Band, That's the upper band and the lower band. All the information you need is available. Entry points, exit points, reversal points. So when price is moving in an uptrend, it should also be riding the outer band. Okay. When price is moving in a downtrend, it should be riding the lower band. Price is always looked at in connection with the upper band and lower band and the moving average. So as price is moving in an uptrend, it should stay near the upper band. When price is unable to reach that upper band and tries and bounces off of it and can't make it, tells you that the price or the momentum of that asset is waning. When it falls below that moving average, it tells you the trend is reversing. Okay. It's got nothing to do, once again, with the width of the bands. The width of the bands simply tell you the market volatility. So remember, Bollinger Bands is based on a middle band of usually 20. The upper band is 2 standard deviations, and the lower band at 2 standard deviations, which gives you the market movement. So let's translate. We see it right here. Upper band, lower band, and moving average band. Now, I've given all this to you in your handout there, that little handout guide I've given you, and it spells it all out. Now, there are 3 primary uses for Bollinger Bands or 3 applications. We have pattern recognition, trend analysis, and reversal signals. So we can identify early warning signals, signs of reversal. We can recognize double tops, head and shoulders, and double bottoms through pattern recognition. And we see reversal signals that detect trend continuations and conclusions. So we get pattern recognition, trend analysis, and reversal signals. There are many ways to use Bollinger Bands, but it's important to note that when the price touches the upper band, that doesn't automatically mean sell. Similarly, if the price touches the lower band, that doesn't automatically mean buy. In fact, take it from John Bollinger Band himself, who said there's absolutely nothing about a tag of a band that in and of itself is a signal. Prices can walk the band during strong down or uptrends. This means that there are repeated instances of price touching and breaking through the lower and the upper band. That's why you may not want to take action when price touches either band and might instead prefer to wait for the look of a double bottom or a double top, which is the M and the N formation. So we have double bottoms and double tops. They help let us see when price is reversing. So a double bottom is when price touches down to the same price in the band, comes back up and touches that same price bottom again. So we have a first low and a second low. And that's the formation of the double bottom. But the most popular way is through what we call W and M patterns. And these are double bottoms and double tops. Now, the fact is they form very slowly. You don't have to rush to find them, because what we look for is we wait till what we call the N formation is developed. The N is the first 3 legs. In other words, price moves down, hits a low or bottom, moves back up above the moving average, not to the upper band, and then falls back down again low and hits that bottom band to make that second bottom. This is called the N formation. Doesn't help you with any of your trading at this point. We're looking for price to bounce back off and start forming the W. When price moves back up off that second bottom and crosses the moving average, we then have a basic signal to buy, because it should complete this last leg to form at least the height of the previous. So one of the most popular patterns that traders like to use Bollinger Bands for is the identification of M tops or W bottoms. Typically viewed as a strong reversal signal, similar to double bottoms and double tops, the Bollinger Band can be useful in identifying potential entry points when traders and even for points for traders and even breakout opportunities. So in other words, we were moving in a downtrend. We had a retracement, came back to that downtrend. Now, that downtrend could have continued on, but when it forms the double bottom, it's giving us a reversal signal because it moved from that downtrend into an uptrend. Conversely, we have it also in the M formation, which is the exact opposite, same step by step, but it forms two highs, and it gives you the N in the opposite position and then gives you W. So as you see here, it made the first top, then the second top. And again, we're not concerned until it breaks the moving average of that fourth leg. Now, Bollinger Bands is not a standalone indicator. We highly recommend combining Bollinger Bands with the RSI indicator. It's the perfect match. There are two types of tops that we need to look at when trading. A three pushes to the high top often develops as the leading edge of a larger, longer topping formation. Typically, the way it forms is like this. The first push will make a new high outside the upper band. The second push will make a new high and touch the upper band. And the third push will make a new high but will remain in the upper band. That may be a reliable indicator of decreasing momentum. With it, you may want to notice that there's also should be a decreasing volume. So in other words, to see it on a chart, we get push one to the up and it breaks out of the band, eases back down, comes below the moving average, pushes back up to the upper band, eases back down, staying above the moving average, and pushes up to that band again. At this point, we would expect it to bounce off that band and break below the moving average. So at this point, we could take a short or sell position. You have the opposite in the three pushes low. So there are lots of signals that it signals the starts and end of trends. Bollinger Bands can also indicate the ends of strong trends. Strong trends cause an expansion in volatility that will cause the bands to initially move apart, meaning the lower band will actually move down opposite the trend. When a trend begins to wane, the lower band in an uptrend will turn back up, which can be a signal that the move might be over. Volatility tends to be mean reverting. Periods of low volatility are generally followed by high volatility and vice versa. When the bands are narrow, it's called a squeeze. And it means that the volatility is low. And you can be sure that sooner or later, that asset has to break out, is either be up or down from that squeeze. And it's called trading the Bollinger Band squeeze. And it will eventually come to a point where it's going to break out up or out down because it can't stay with low volatility forever. So a simple way to spot a squeeze is when the bands are narrowest and they've been that way for 6 months, 6 weeks, 6 days, 6 hours, depending on what time frame you're looking for. They're going to have to jump out. When they break out, they're going to break out with momentum and signal the beginning or the end of a trend. When they're breaking out from a squeeze, they're going to signal the beginnings of a new trend. When trading a squeeze, you might consider placing a buy entry point above the upper band and a sell entry point below the lower band in the squeeze area. So if you know how to use order entry right, you can set up an OCO. One cancels the other, and you can set up a short and a long position so that whichever way it breaks out, your trading platform will execute the trade in the right direction. So I'm going to pop up a presentation and share it with you. Now, again, all of these things are explained in that handout. But let me show you a great way to set up the bands and use these for these entry points and stop losses. You might have to turn up your volume a little, depending on your system, to hear it as well as you're hearing this presentation. So as you can see, there's many different ways in which to use Bollinger Bands in your trading. You can see that video, that presentation, that short little presentation, at the link I just put up on your screen. Now, while Bollinger Bands are exceptionally helpful in determining when an asset has overshot to the upside or downside, it's important to use the bands also to set risk conditions, not just entry points. Additionally, risk and reward should be set based on the width of the bands or the volatility. With narrower risk reward during low volatilities and higher risk reward ratios during high volatility. In contrast to most other indicators, the Bollinger Bands are non-static indicators, and they change their shape based on recent price action and accurately measure momentum and volatility. Thus, we can use Bollinger Bands to analyze the strength of the trends and get a lot more important information this way. Now, I'm going to show you a series of charts with a trading strategy for Bollinger Bands. And please read at the bottom of each chart. It's going to tell you step-by-step procedure. This chart can this little set of charts can also be found at that link address I just gave you. So as you see, there are just a few things you need to pay attention to when it comes to using Bollinger Bands to analyze trend strength. During strong trends, price stays close to the outer band. If price pulls away from the outer band as the trend continues, it shows fading momentum. Repeated pushes into the outer band that don't actually reach the band show a lack of power. A break of that moving average is often a signal that the trend is ending. So as you can see, Bollinger Bands can be useful by themselves. But remember, too, that they can also be combined with other indicators. Since they are a pure price indicator, you might want to consider combining them with volume indicators for even more depth and insight. Ultimately, there's no indicator that guarantees you'll always get in the bottoms or out at the tops. However, Bollinger Bands essentially, especially paired with other indicators such as RSI or chart pattern recognition tools, can help you make better trading decisions. So remember, successful day trading is mostly a game of pennies. The best firms and individuals, traders who trade looking to scalp small amounts. Using Bollinger Bands and the Bollinger Band width show that intraday edges do exist. Now, there is a preciseness here using Bollinger Bands, and use this preciseness to your advantage. So remember, find an asset that's in an uptrend or a downtrend. Look for the asset to fall back and touch or almost touch the bottom band or the upper band. Use it with RSI, and once the RSI hits the lower Bollinger Band, look at the RSI indicator, and it should be between 30 and 50 and rising, or the opposite way for the lower band. And after price hits the lower band and RSI is going upward, make the entry. Remember to use stop loss and take profits in your trading. So to look at those slide presentations, again, that I showed you in that little presentation, rule number one is find an asset that is in an uptrend or a downtrend. 2, the asset must fall back and touch or almost touch the bottom band. Once the price hits the lower Bollinger Band, look at the RSI indicator, and it should be between 30 and 50 and be rising. After price hits the lower Bollinger Band and RSI is going upward, make an entry. You can make an entry when you either see a strong bullish candle to the upside, you can see consecutive reversal candles to the upside, or you find a bullish pattern forming. You need to see that the trend is moving upward in this case before you enter a trade. And then lastly, always make sure you use risk management, apply stop loss, and take profit targets. So always remember, by placing a stop loss and having a good target with this strategy, we always recommend using 30 to 50 pip strategy. You can take profit when the price touches the other Bollinger Band in the opposite direction. So in conclusion, Bollinger Bands are a great indicator to use in any market. When you combine these with the RSI indicator, it should give you great entry points. Okay, and something else to consider is when price touches the middle band, you can make a second entry to press your winners. But remember, Bollinger Band offers you many different trading strategies and a lot of information. So sit down, add it to your trading, start to master it, use the handout I gave you, use the link and watch for that little step-by-step screens of the strategy, and start trying Bollinger Bands on a LegacyFx demo account and see how well they work for you. And thank you very much for joining us, and thank you for trying out Legacy Forex and also being a member of investing.com. Have a great night and a great weekend now.